Digital currency in India. Reserve Bank of India has kicked off recently a pilot for specific use cases of a central bank digital currency. This pilot is currently only for banks, but the aim is to extend it to corporates and eventually individuals. What is CBDC? The Reserve Bank of India defines central bank digital currency CBDC as a digital form of legal tender issued by a central bank. Simply, it is a digital form of fiat currency, that is the Indian rupee. As a result, it can be exchanged for fiat currency one for one. The currency will be exchanged through blockchain based wallets. It will also be an exchangeable with government issued money. CBDC offers an alternative to Western payment systems. CBDC can be classified into two types: retail and wholesale. Retail CBDC would be potentially available for use by all. Wholesale is designed for restricted access for financial institutions. Reasons behind issuing CBDC: reduction in cost associated with physical cash management, supporting competition, efficiency, and innovation in payments. To explore the use of CBDC for improvement in cross border transactions, protect people from proliferation of crypto assets. Features of digital rupee. CBDC is a sovereign currency issued by central bank in alignment with their monetary policy. It appears as a liability on the central bank's balance sheet. It must be accepted as a medium of payment, legal tender, and a safe store of value by all citizens, enterprises, and government agencies. CBDC is freely convertible against commercial bank money and cash. CBDC is fungible legal tender for which holders need not have a bank account. CBDC is expected to lower the cost of issuance of money and transactions. How does the pilot work? The first in digital rupee pilot began in the wholesale segment on 1st November. The pilot has been rolled out through 9 banks: State Bank of India, Bank of Baroda, Union Bank of India, HDFC Bank, ICICI Bank, Kotak Mahindra Bank, Yes Bank, IDFC First Bank, and the HSBC. The fund transfer happens via the distributed ledger technology, also called blockchain technology. How is CBDC different? Under the new CBDC pilot process, this will not need to take place. The money will be exchanged between the banks themselves without the interventions of Clearing Corporation of India, CCIL. Under the CBDC pilot process, money can be transferred immediately. Hence, settlement is actually almost on real time basis. At the moment, we use online wallets like Paytm, Google Pay, and Amazon Pay. Hence, the CBDC may not make much difference to people, but for corporates or instantaneous transfer can make a huge difference. Eventually, it can even be used for cross border transactions. What is blockchain technology? A blockchain is a system of recording data that is almost impossible to change, hack, or cheat. It is a digital ledger of transaction that is copied and distributed to an entire network of devices on the blockchain. In simple words, the technology helps store and transact digital currency, as it is difficult to tamper with. It is also one of the safest ways to exchange currency digitally. How is digital rupee different from money in digital form? A CBDC would different from existing digital money available to the public, because a CBDC would be a liable of Reserve Bank and not of a commercial bank. Difference between digital rupee and cryptocurrency. A cryptocurrency is a decentralized digital asset and a medium of exchange based on blockchain technology. However, it has been controversial due to its decentralized nature, meaning its operation without any intermediary like banks, financial institutions, or central authorities. On the contrary, central bank digital currency used by the Reserve Bank of India will be a legal tender in a digital form. The digital rupee will be different from Bitcoin, Ethereum, and other cryptocurrencies in the sense it will be backed by the government. Secondly, having an intrinsic value on account of government backing, the digital rupee will be equivalent to holding a physical rupee. This presentation is based on an article of Money Life India.